Hello, traders. Let's have a good week. How's everyone doing? Hello, Brock, Ren, Kevin. Good morning to you, Jagal. I want to start off with WTI. It's a great call, pattern in play last week by Blake up here. And, we had this nice little decline, a little over $3.50, and found some support here. If you're a bear, quality for maybe an ABC is going to be up to around 40. If we get up there, that could be a decent shorting opportunity with stops over the high of the move. Everyone with me on that? Euro strong, did nothing wrong. In fact, most of the currencies are sideways. This is sideways. Aussie sideways. Canada's sideways with an upper bias. So, most of the currencies, yen, no news, it's sideways. But I do want to show you something here on the dollar that I think is really a bull bear line for not just a dollar, but for everything. And it's right here, this blue horizontal line. Hi, Pete, Mark. Some people are using it from this low, breakdown at 98.27. You could see all the confluence, all the moving averages on the daily converging right around this area too. So if we end up negating this breakdown above this level, I'd say that there's a pretty good probability that we're on the verge of a major dollar rally, that we'll see par or better and even take out this high. So really, this is, I think, the most important bull bear line on the board. So pay attention to it. I'm going to be gone for the rest of the week after today. So pay attention to this 98.58 level throughout the week and closes above it. Okay, Pete. Where are you wrong on your long dollar position? Under the low? Or last week's low at 96.30. Anyway, today it looks a little bit weak, mainly because of the euro, and because the euro is so strong, I just want to point out people that have been milking euro pound. We're now at the 61.8% retrace of this decline. People remember that I thought when we were buying it down here at the 87 level that we would get a fib retracement, and here we are. I actually think before it's over, we're going to make new highs in euro pound. But if you've been riding the train at 61.8, not a bad place to think about taking something off the table. Okay. Gold, I'm still waiting for new highs. So far, we're stalling up here. A lot of people are saying that this is wave 5 of a Greg was saying we could get an ending diagonal, which, in my analysis would be a third drive. It's coming in over 1784. So if this is a fourth wave, I guess we could have, do this and then do this and then go. But here's another important line in the sand for you in gold. Taking out Friday's low would not be such a great situation. I think it would seal the deal for a gold correction. I mean, we were getting hammered and it brought the gold back on Friday, almost like we're getting a little flag in here. So this was like a $25 rally, and if I extrapolate it, that would take us up near 1800. Silver's outperforming today, but still lagging dramatically the last few days in the gold. So those are a few things. I don't know what to do with the yen. Perhaps we're going to have to make a move up to 108.30 or so for a better sale. but it does look like there is a possibility of 1, 2, and possibly a 3. You would think if we're going to get another gold high, and yields, I know we're disconnected on the correlation, but lower yields and TLT look like it broke out back above this 163 level, measures up here. So we'll see if what happens with yields with the S&Ps being strong. We did get a 2-week off number 2-week off number signal last week by closing under 30.34. This week, the weekly 2-week off numbers up around 30.73. Back over 3,100. We're going to make another charge. I know some people think that's going to happen. It could. I mean, this doesn't exactly look impulsive. It doesn't look like this, where we got here from point A to point B in a hurry. And that's about all the markets that I wanted to cover today, but I do want to emphasize this blue line up here between 98.20 and 98.57. Because if we do start to negate the breakdown in dollar, it's going to have an impact on everything, probably leading to liquidation breaks in most instruments. So that's an area that's going to be important, not just to the dollar, but to everything. Well, I just said Rio, Euro Pound is at 61.8. I wouldn't sell it here. And, people that know my teachings could probably, well, let's do a quick pop quiz and then I'm going to toss it to Blake. Okay, so here's a 4-hour. Let's see what the 2 hours doing. Why wouldn't I sell this? Anyone know? I know there's many people know. Okay, thank you, Jess. Any reason why this isn't a short to me, even though we're up at 61.8? Going once, going twice. No? Yeah, Mark's got it. Confirmed, James got it. Yeah, momentum's confirming this move. So there's absolutely no divergence. I'm not saying that it can't pull back, probably will, but for me to look to reverse, I need price making new highs and RSI not confirming the high. So this says Dale buy a break because this is a high, but not the high. Everyone with me? Okay, so we have a great guest today. We have an energy expert with us. He covers energy, and Anas will be with us at the top of the hour. I wish everyone a very good week ahead. And at this time, I'm going to toss it over to Blake and see what he's thinking going into a new week here. A shortened week. I believe we will be closed Friday for the 4th. So keep that in mind, a little bit of a shortened week. How you doing this morning, Blake?
Good. Yeah, it is a shortened week. It's a shortened week, and so that means we got non-farm payroll actually on Thursday this week.
Oh wow. Okay.
Are you there? Can you hear me?
Yeah. So
Okay.
they moved it up a day. Yeah.
What's that?
Yeah, they usually move it to the next week, but that's interesting. All right, so Thursday will be a nice wild day for everyone.
Yeah. I
Maybe.
I don't know why. Some weeks, some beginning of the months they do it. 1 week, and then I have no idea. It's like it has something to do with the calendar and what day that the first actually falls on. But whatever. Regardless, we have. Sorry. Of course, as soon as I start speaking, I start yawning. I haven't yawned since I've been up this morning. But as soon as we get, this is going to be a shortened week, as you were talking about. But as the data comes out, the markets are still going to be open. So that's the thing you got to also think about. It may be a shortened week. Like for us, we're not going to be broadcasting. And yes, the markets are probably going to be, probably quiet, but the FX market will still be open because, we're celebrating in North America, we're celebrating our 4th of July weekend. U.S. equity markets will be closed, but European markets will be open. Currencies will still be moving. So if we have an explosive move on Thursday, it could still move a little, and really based on what else is happening, what other things that are happening, we can still get movement on Friday. So don't think that the week is, as a currency trader, not like the week is over come Thursday. We just won't be broadcasting on Friday morning, as you normally would hear at this time
Here.
on this. Here on this channel. So anyway, how are you doing? How was your weekend?
Fine, Blake. Beautiful weather. Really can't or want to go anywhere, but beautiful.
Oh, well, that's good. I wish I could say the same for us, but yeah, we're getting. It's interesting. Where I live, because the coronavirus is so bad in Arizona, and it's
Really
hot.
bad there.
Yeah, it's bad here, and it's so hot. We're kind of experiencing maybe what New York, New Jersey was experiencing in the wintertime, where the coronavirus was really rampant, but you're inside because it's too cold to go outside, and then it's too cold to do things outside, and then B, you don't want to go outside because there's the virus going around. So we're kind of like in a similar situation, but opposite, where it's too hot to go do anything outside. Yet it's so hot, and you don't want to go anywhere because you can't go indoors, and because if you go indoors, obviously the virus is
It's
around.
a dry heat, though, Blake. That's what everyone says.
Definitely, they say it's a dry heat. They say it matters, but it's still hot. It doesn't matter. It's hot.
Yeah, dry heat's like everyone turn on their hair dryer and put it in your face for about 5
Pretty
minutes.
much, yeah, pretty much. So anyway, my weekend was just being quiet, a little stir crazy, as most of us are dealing with, is actually what I wanted to point out. But let's talk about some things that are happening over the well, actually, as of right now, you'll notice the S&P. I actually have not adjusted my trend lines from the week ahead video. So the reason why I bring that up is because I drew this lower trend line here on Saturday when I made the week ahead video for you guys. I said I would not be surprised if the S&P is just bouncing around in a triangle pattern.
How do you
in a
come up with
consolidation.
that line, Blake? I'm just curious.
What?
How do you come up with that line? I'm just curious.
Well, yeah, we were like this. So
yeah,
right. So I just left the trend line. I drew the trend line as it was, as we respected it on Friday, but I left it there because I felt that we're probably going to be range bound. The reason why I felt that we were going to be range bound is more what was happening in the FX market, but obviously what's happening in the S&P is going to influence us, what we're doing in currencies. The reason why I bring this up is because as long as the S&P is finding support here, you're not going to find the dollar being too strong against most currencies. Now the euro is stronger this morning. And you could see we're challenging the 618 retracement at 112.88. The reason why that's happening is because Germany announced that they're implementing some stimulus measures, and they're going to reduce the VAT. So that is helping the euro actually rally against everything. I'm not going to talk about every current euro cross, but I have to talk about this one. Look at the euro pound. We are ripping right? We're ripping up towards the 161% extension of the triangle. This already started last week, the breakout, and you can see this is a really massive move. Now the question is, how far is this euro pound going to go? It points to 91.77, the 161% extension, but that also is, that also is the 618 retracement. Let me reset that. It's the 618 retracement of the highs here to the lows. That also comes in right at the same price, basically under 92 pence. So the reason why this is important is because if you are trading the euro, well, if you're trading the euro or the sterling, either or, you need to be really aware of this, because if we get to, like, let's say 91.80, let's just call it, the average of this this price right here. We get to 91.80, right? And we stop. And you're short the cable in any way, shape, or form, you've got to think about not doing that. You know what I mean? You got to think about not being on the short side of the cable once we hit here, because the euro sterling has so much liquidity that goes through this particular pair. This is like one of the most liquid currency pairs in the FX market. When you match up these two major currencies like the euro and the Great British Pound, the pound sterling, you've got this mix of two major currencies that provide a lot of liquidity. So when they hit a major resistance or support, you have to think about that when you're trading other cross rates. So as the euro sterling gets to, like I said, this, like, let's just say it's 91.80 right here, and you're short the cable, and if you're like, let's say you're short the pound dollar, you probably don't want to be short the pound dollar anymore. Or if, let's say you're short the pound yen, you probably want to make sure that you have where your stops are at, and you start to be very cognizant of being short anything sterling once the euro pound gets to a big resistance. I do think this is a big resistance. I do think that it's probably going to hold at that point, because relative strength is now getting overbought intraday, right? So now that you've got overbought intraday RSI, you're approaching a couple of key levels of resistance. If you're long here, you got to be real careful. And like I said, if you're short the pound in any way, shape, or form, you really got to think about not doing that. So that's I guess that's the point I wanted to bring up to you guys this morning. So you got equities that are a little firmer. The rest of the FX market's pretty quiet. I mean, the euro is obviously stronger. The cable's a little weaker, and you can see we actually hit new trend lows in the pound, in the sterling or the cable. I just don't know how far we're going to go here. But as I said on the week ahead video, this support, we're in the support zone. So I would way rather be on the long side of the cable down here towards the 78% retracement than trying to buy it down here. Although what could happen is we could end up, and I'm just going to move this for a second. We could end up getting, a false breakdown below the lows. And, if the euro breaks through 113, which, by the way, if it broke through 113, that'd be pretty bullish, because now we're talking about a flag pattern. If the euro dollar broke above 113, that means the cable's probably going to at least start to find some buyers. Well, in this case, if it did, we would have we'll have a false breakdown and then a reversal, right? So we're gonna we'd have a false breakdown and then a reversal back. It would take the sterling higher with the euro. And that's something that you got to think about as well. And I wouldn't be surprised if that happens. The Aussie, very quiet. We're in our triangle pattern. Kiwi, very quiet as well. I'm more concerned about the Kiwi. Let me get rid of this. I'm more concerned about the Kiwi if we break through this 63.80 support, but it's obviously really quiet right now. The dollar Canadian, is just kind of sitting there, and it's come off really key resistance around the 137 level. We're fairly well supported, you know, with stocks where they're at. I mean, you have to imagine this dollar Canadian, it really hasn't done a whole lot. I might as well just delete these because these don't really matter right now. Let's delete this too near term. So, I mean, you can see we're at basically holding a 618 retracement on an hourly basis. After the rejection on Friday, it's just kind of sitting there. We're not really dropping, which, I mean, if you're short the dollar Canadian, you're probably like, you know, this isn't good, because crude's been rallying, stocks just popped higher, and the dollar Canadian is not, it's not lower, right? So the longer we sit here, the more of the risk that we have that we're going to move back up to 137, especially if stocks come down and crude oil starts to come off a little bit. Now, oh, and that brings to one last thing before I bring in Steve, and we got to hear from Stelios because he's vacationing somewhere in Paros in Greece, and he wants to rub it in everybody's face and say hello this morning. So, which is really so nice of him to do while the rest of us are on lockdown. I'm just kidding, Stelios. I know you're listening in.
Switch on the camera.
I know. Yeah, he's like, oh yeah, here I'm on the beach having some cocktails. How you guys doing in lockdown over there? Yeah, it sucks to be you. So let's go into the crude oil market. I want to show you crude here. Now, I still actually have a pattern in play in crude. This is, I moved the stops to basically break even the invalidation level, because it's like, okay, you've got to give an opportunity for your trade to work for you. This is one of the things that I learned really early in my career as a trader. My best friend, who was my trading mentor at the time back in 1995, 96, he was like, Blake, I remember I just kept scalping all the time. I just, I'd make money and I just scalp and take my money off the table. And he's like, if you feel really strongly about a position, why don't you let it run a little bit? Why don't you, move your stops up to break even and give the thing an opportunity to make you money? And I'm like, oh, that made a lot of sense. But so whenever I'm in a position where I can move my stops to break even, and in a lot of cases, doing a pattern in play, it's a little bit more difficult to do that because these aren't actual trades. They're just trading ideas, if you will. But, based on chart patterns and everything that we're seeing. But in this case, I've already taken some profits in the crude oil market personally. So now if I can just let the rest of it run, yeah, I mean, if we start moving the way down to 30, I'll feel, much better about, even if I'm only in a quarter or half of my position than I was in originally. And so that's the approach that I try to take when I can. If you get into a position and it immediately starts working in your favor, taking some off the table, moving your stops up to break even. And if, like I said, if you got a lot of conviction about a particular trade, try to stay with it if you can. And that's what I'm attempting to do here. But what could very easily happen at this point is, it pushes up another 70 cents and just invalidates the whole trade, which, could happen. But anyway, if crude oil rolls over, though, you got to pay, going back to the Canadian, you got to pay attention to the Canadian because it's not breaking down. So if it's not breaking down, chances are it's, heading back to 137, probably challenges major resistance. Okay, I'm done speaking. I want to bring in Steve and Stelios on the beach, tanning his little toes. What's going on, gentlemen?
I'm very good. How are you?
Oh, of course you're very good. You're
Switch
on an island
camera.
in Greece.
Switch on the camera. Stop being a.
Are you sure?
Yeah, absolutely.
Oh, I can I even see what the camera looks like? What does it look like?
Wait.
I can't even see.
Switch it on.
I think I'm allowed. Yes.
There you go.
Oh, there
Oh,
he is.
jeez. For crying
Yeah,
out
it's pretty
Christmas.
nice.
Bastard.
Yeah, I know. Like, we really need to get. So, all right. So, Stelios, now that you just showed us exactly where you're at, please give us a market update from where you're at. I got to hear this because you've obviously been doing a lot of research on the beach. So,
Of course I have.
what?
No, but
So, why is
seriously,
the euro stronger this morning?
it's
Let's
the
quiz you.
well. First of all, I think the main thing that's moving is equities risk on. So you have the euro, the dollar weakening. Now that's been the correlation for the last 2-3 months. The main question is what's happening with the pound, like you very correctly said, and it is basically they have resumed talks in between the EU and the UK people, and they got underway. And remember, Boris Johnson has said that we want to find something quickly. You know, they want to find something, a solution in July, August. So the market is anticipating, or whoever thinks that there's going to be some kind of a deal, they're anticipating it's coming soon, and there haven't been any positive tones at all. So I think the market is getting a bit nervous. The other thing to consider is look at August 2017. The euro pound peaked at 93 and change. August 2018, it did this but peak a little bit lower. August 2019, it peaked at 93 and change. So I think there's a bit of seasonality, or there seems to be. So I wouldn't be surprised if we get another little push higher. Interestingly, if before we started ForexAnalytix and I got to interact with people like you, Blake, and Dale with the RSI and all that, I would already be shorting euro pound. Now I'm not. So, my entries used to be a little bit early. I know that that's a fact. Now I'm taking my time. I'm listening to what other people are saying, like Dale has been saying about the RSI and, you guys and Steve. So I will short the euro pound, but not yet. I'm going to be waiting for something like 93 again. Because as I've said before, I think there will be some kind of a compromise between the two sides.
Awesome.
Anyway, that's my view.
Well, hey, thanks for the update from the beach, Stelios.
He got all that from the lady with the red bikini.
I did, yeah.
And, real quick, Christopher asks, "Hey Blake, the levels, the levels bias sent today says the cable is bearish. I don't know if you're referencing the cable, the support and resistance, maybe the key levels that were updated, but you'll notice in the bias tab, there's the candlestick, the basic technical analysis, and Elliott wave analysis is all biased, which is red, which would be a bearish bias, right? So the one thing that I want to point out is when we have these biases that pop up on ForexAnalytix, they're a culmination of the charts and what we've uploaded over the course of the last, what is it, Steve? Like several weeks or several days, and it's like kind of a moving average, if you will, of all the analysis. It's and so it will take usually some time as we update charts for the biases to actually change, because it's really more of a reflection of a trend. But right now, yes, the pound, as you guys know, I mean, the pound is lower today, and the bias is still bearish. But that doesn't mean that we're not going to be coming into support. As I mentioned to you just a little while ago, if the euro sterling gets to some resistance, it might turn the pound higher near term. Does that mean it's going to turn the pound out of a bearish bias? No, but what could actually happen is we could see move like this, and then move like that, right? So the bearish bias is still intact, and you can see it's clearly here over the last last several weeks we've just been moving lower. We stair step, or because nothing moves in a straight line anyway. So anyway, I hope that answers your question, Christopher. And Steve, good morning. How are you?
Good morning, Blake. Not as good as Stelios.
Yeah, I mean, who
I'm
is?
still here, by the way. I'm still here.
Hey, and by the way, Stelios, you're in Paros, right?
Well, we're staying in Paros for a week, but we're actually in Antiparos, which is a tiny island next to Paros today.
Oh, okay. Yeah,
That's where Tom Hanks goes every year. Tom Hanks.
Yeah,
I'm
he
sorry?
has a house. Tom Hanks goes
Hanks
there
is
every
here,
year.
like,
He has
for
a house.
yeah.
Oh,
Yeah,
oh,
yeah.
that's kind of cool.
You share something with him. You both have Greek wives. Half Greek wives.
Yes,
So,
right, right. Yeah, except my wife doesn't have a house in Greece, which would be nice if she did. Um, I wish we could. I wish we could get there more often than we do. But I did stop in Paros back in 2003. It was our honeymoon, and we were on the island waiting for our next boat for a few hours, and we sat on the beach and had some drinks, and it was a really beautiful island. But I haven't been to the one that you're at right now, but it looks awesome.
Yep, it is.
All right, well, thanks for
Kim
joining us on the, what?
Kim says he misses roads. So, you know, no disagreement there.
I would love to. That's one of those places when I go to Greece next, I would love to go to Rhodes. I think that's one of those places.
Next year, that's where we're going.
Next year, right? Once we have a vaccine. All right, guys. Well, hey, I'm going to turn it over to Steve now, but I want to say thanks everybody for listening in. Stelios, thanks for coming in on your vacation while you're on the island. People love to see that you're out enjoying it, even though we all can't because the rest of us are in lockdown. So
Yeah.
Yeah.
All right.
Actually, I have one more thing to say. Actually, thank you, Blake. Thank you. You can go.
You can
All
get
right,
the
I'm
hell
gonna
out
turn
of
it over
here.
to Steve. Thanks. I'll go, and then you guys have a great remainder of your day, and Stelios, have fun out there.
Bye, mate.
All right.
Good luck, Blake.
One more thing I wanted to
Thanks,
say, just
Coach.
as a general comment. We topped 10 million cases of globally of COVID, 500,000 deaths. So it's not, it's still an issue for sure. I was reading Goldman's analysis from Goldman Sachs today. They are making note that the airline traffic trends are way below what they were forecasting, and they've dropped their forecasts throughout this year, next year, and 2022. But in other news, just to keep buying equities, and the world is beautiful. So we're seeing two different things. Where the economy is still struggling. We're definitely not where we were before COVID, not even close. And forecasts are getting pushed out further and further to the future. And on the other hand, we have risk assets which are still refusing to correct properly. We might get a correction, we might not. I still think we will, but it's still a question mark.
And another news, the airline company lobbies want another bailout of something like 35 billion. Now, why exactly would you spend taxpayers' money to keep people in an industry that will definitely face a much, much bigger than expected reduction in demand? And, of course, it's unfortunate whenever anybody loses their jobs, but we know as a fact that having to do with the health of the economy, it's the health of the companies and the economy as a whole. It's much better to let the economy rebalance. I mean, if we need long term less people working in airlines, that's what has to happen.
What I think the problem was in 2008 when they bailed out the banks. They set the precedent, and now they're bailing out
moral hazard.
everybody. But the question is, banks I can understand too big to fail, or if the banks fail, then the whole financial system collapses, and that's a big risk. But airlines, you can let 2 or 3 or 5 or 10 airlines collapse. Then new ones are going to come up, or they're going to be rescued or something.
Yeah, they're gonna buy out their assets at a fraction of the price, and they're gonna keep how many people they need to keep, as every industry does. I mean, industries expand and contract based on demand. That's how it has always been, no exception whatsoever.
Absolutely. Dominic says you bail out someone for $1 billion, they give you 50 million under the table. Well, I am cynical. I think that as well, but you'd like to think that this doesn't happen. Of course it does.
Yeah. Okay, what else we had? I didn't want to interrupt before because these data were we had Canadian building permits, which is they don't move the market, so they were better than expected, but who cares? USD CAD didn't really move. Anything else that we had during the weekend before we release you back to the, Aegean Sea and the mermaids?
Not really. No, we've got stuff coming up this week, but and payrolls obviously at the end of the week. But oh, actually, they are on Thursday.
We have
right?
both NFPs, Stelio, I think, and initial jobless claims on Thursday.
Thursday, yes, that's
yes.
correct.
So it's Thursday is going to definitely be an interesting day.
Yeah. Yes.
We
so,
also
no.
have Poland's pierogi production number coming out in about 10 minutes.
Yeah. Okay.
You like pierogies? Huh? He brought some to the White House there. Anyway.
Neil is asking if you can show once again the area and the sea there, Stel,
Yeah. 1 second. Start
before
video.
you go.
Yeah.
There we
Wow. Look at
There
that.
you
What's the water temperature there, buddy?
It's warm. I tell you.
Yeah. Look at that.
Empty. It's empty, right? It's amazing.
Yeah. Wow.
Anyway, sorry about that. All right.
Okay, Stel.
Thanks, Mike.
I'll return the favor when I go for vacation and you are in Athens getting burned up.
Please do.
I'm going on vacation tomorrow. I'll show you guys where I'm at.
Okay.
Okay. Bye, Stel.
Bye.
Enjoy.
My only vacation is in the hospital. All right. That's a poor man's vacation.
Okay.
Anyway.
So, free advertisement to Greek tourism. Go ahead.
Yeah, really. Yeah.
Join us.
Come to Greece.
In case you didn't know, we have very, very few cases of COVID in Greece. We have something like 10 new cases in an 11 million population per day and less than one dead person per day. Not that any number of people getting sick or dead is a good thing, but definitely, a lot better than, the vast majority of the countries. And
can Americans still come?
I doubt it. I doubt it. I have to check, but
anymore.
I doubt it. Yeah, not anymore.
Excuse my language.
Unfortunately, for you, not anymore. So yeah, that's the benefit, as it seems, because we can now judge, in retrospect. That's the benefit of getting locked in. I think that if you were to get locked in, which it's debatable if it's the best approach, but it was worth doing it very, very early on. And here in Greece, we did it very, very early on, before we even had like a couple of dead people. So, that.
And it was a true lockdown in Europe. Here, this was.
Yeah. So in essence, in essence, it put the spreading of the virus, in halt very, very early on, and that's actually what saved the day and the situation. Now,
and our lockdown was not where you could only go to the grocery store and the pharmacist with a pass from the government. People were going to their friend's house or their relative's house.
To answer
Home
Baroque's answer Baroque's question, no, the vast majority of Greeks, believe it or not, are not wearing masks. That's why I'm telling you that despite the vast majority of people outside, if I go outside and I set my camera, you'll see that life is back to normal. You will find a few older people in stores with masks, but like 95% of the population is not even using masks. But the thing is, we stopped the spreading of the virus at the very, very beginning, so there are so few people with the virus, and the weather is definitely helping as well. So even without masks, the situation is still, absolutely under control. Now, I'm afraid that, when September, October comes and, we start getting, flus and all that, unless people, start being more careful, with wearing masks, etc., things might get tougher. But for the time being, it's great. It's absolutely fine.
All right, enough of that.
Yeah, enough of that. Back to the.
Because we're all pretty pissed off here.
Yeah, I mean, yeah, I don't know. I don't want to have this conversation because.
Well, you brought it up.
No, I mean, I don't want to have. Yeah, but I don't want to have the conversation.
Stop rubbing it in, man.
Okay. Anyhow, so today we opened the day lower yesterday, and it makes sense because news that come out are should definitely not be helping risk appetite, but the market have already retraced all their overnight losses. They're like, incrementally positive as we speak. Now, despite stock indices being more or less back to zero on the day, that hasn't stopped the dollar being under pressure, and the reason is mainly the euro. So I'm not going to go, overanalyze things that Blake and Dale already covered. I'm going to briefly take you over some other euro pairs as well. First of all, let me tell you that it looks very clear to me that this is some type of a bullish consolidation in the euro USD, but it's not just the euro USD. For example, here's the USD Swiss. Looks like a corrective triangle, looks like it's extremely likely that it's going to break to the downside and continue. Look at Euro Swiss. Euro Swiss back tested this horizontal support resistance area after retracing somewhere between the 61.8 and the 78.6% fib. And it's working on building, let me zoom in, a morning star formation on the daily chart here. In combination with a possible breakout from this like pennant, looks like it might continue higher in the days ahead. So Euro Swiss, one more. Now, they already talked about, and Blake already talked about the Euro Pound. So I'm just, going to add that I'm tracking this channel. And I do agree. I mean, I don't think this is anymore the time to be buying the Euro Pound because we're getting on resistance areas, the 61.8 and above it, the channel. So I think that, if you wanted to be long the pound, you could have done that when we broke this rectangle. You could have done that when we broke through the second rectangle, right? Because we formed here a base. Then we broke out of it. Then we formed another range. We broke out of it. Now I'm pretty sure just by eyeballing it that we've now fulfilled, let me extend. Yeah, more or less, we're going to be fulfilling this range's target in a few pips when we actually hit the 61.8. So, as I said before, this is not anymore the time to be buying the Euro Pound. I mean, you had two chances to buy it with, a very, very attractive risk-reward ratio. The risk-reward ratio is not attractive anymore. Moving on, Euro Yen. So I drew this on the Euro Yen back there. I mean, something like almost 20 days ago, and it worked out almost perfectly. We found support at this zone, the 200 daily moving average and the 50% fib and this horizontal support resistance area. So this triple confluence of support more or less did the trick. And we had an initial nice outside white candlestick to the upside. And we're starting the week with another strong candlestick to the upside. So something tells me that there is a very decent chance that we found a low in Euro Yen as well. Now, Euro Aussie and Euro Kiwi are showing some signs of life as well. The reason I'm a little bit more skeptical is because we know very well that in order for them to continue and accelerate to the upside, they'll definitely need some help from risk and specifically from risk off. It's it's very unlikely that we're going to see the Euro Aussie and the Euro Kiwi doing well, and while risk is bid. So so in essence, this is a risk trade. Regardless, we are seeing the Euro Aussie attempting to break through this channel, so that's something to notice. And we are seeing the Euro Kiwi creeping higher towards this channel trendline resistance, which is quite close now. So needless to say that if we see some risk off, they're definitely going to be breaking out to the upside. So definitely the Euro pairs, from the FX side, having to do with today's price action, are the first ones that you should be paying attention to. The rest of the FX, with the exception of the pound, which Blake also showed, I'm still tracking this descending channel in the pound, but admittedly the pound is under pressure, and it's moving in the opposite direction that the euro is currently doing. So usually that's unsustainable. It's not that they cannot deviate, it's not that they cannot move against each other, but the long-term correlation is a positive one. So you shouldn't be expecting that the euro and the pound can keep diverging and moving in opposite directions for a long period of time. So you have to keep that in mind, which means that if the euro starts breaking to the upside, I think that it will be a bad idea for people that want to be short the pound against the dollar to want to be short the pound against the dollar, because at the very least I would expect some type of stabilization. So that's my 50 cents here. Now, if we purely focus on the DXY index, we're clearly seeing that this rebound still doesn't look anything than corrective. Now, as I said before, for the euros in the euro QE, the same applies here, meaning, it's impossible to see risk off and not seeing dollar at least holding up, if not doing very well, at least, holding its ground. So, it all comes back to what we've been talking about for weeks, meaning that, for the time being, and as long as the intervention from central banks is as strong as it is extremely hard to ignore what is happening with stocks and try to trade some of the major FX currencies, like the commodity currencies or the dollar index, etc. So the million-dollar question then becomes, okay, what are stock indices doing here? Now, fundamentally speaking, the path of least resistance remains lower. There are huge risks to the economy that this market is ignoring just based on artificial liquidity support coming from the central banks, which unfortunately, because it's long-term bad for the economy, can prove enough for long periods of time. But on the other hand, fundamentally speaking, there are huge risks, and you see, for example, coronavirus cases are going higher. Doesn't really matter if the death toll decreases or whatever, as long as people perceive this as a threat and it affects their economic activity, it will damage the economy. There is no question about it. It will damage the economy. It will damage earning expectations from companies. And no matter what central banks are doing, the period of time in which the earning expectations and stock valuations can keep diverging is not going to be long. So they have to converge one way or another if they manage to achieve, the proclaimed V-shaped recovery in the economy. I'm not talking about the stock market. Then, in combination with the liquidity thrown at the market, they can close the gap with earnings rebounding. So with stock markets remaining in this bubbly environment and not having to pull back that much. But the longer the time passes, and that doesn't look like the most probable scenario, the bigger the risks that we're going to see another sharp leg lower in stocks. So you have to keep that in mind. Now, in the shorter term, what is happening here with price action is quite unknown. I've talked many times about how and more or less an impossible feat it is to try to predict price action when it unfolds in somewhat of a corrective manner. So who knows? Is this a triangle that we're forming here? Is this already a rebound that failed from the retest of the ascending wedges trend line support, which acted as resistance, and we are just at the precipice of accelerating to the downside for another sharp leg lower? Is it going to be perhaps a more complex corrective move lower that's going to slowly take us lower, but in an orderly fashion? it's it would be great if any of us could say that we can read price action at any given time and predict exactly what's going to happen. But I don't think there is or will ever exist a person that can do that. So it's absolutely okay to say sometimes that I don't really know what's happening from here. The only thing I'm certain of is that the risk reward is definitely extremely bad to be long. Doesn't mean that you can't make money being long, but it means that the risk you're taking to perhaps make money being long is not the one you should take, to put it mildly. I still favor at least one more leg to the downside. It's more than obvious. I mean, I'm still short. I'm roughly at break even now again, just out of the money. So that's what I have to say about it. And even us FX traders, predominantly FX traders, you have no alternative but to keep focused on what's happening with risk assets, because these are the ones that are going to be moving the FX markets for the foreseeable future, at least in the short to medium term. And it is what it is. You like it or not, you either accept it or you lose money. That's it. Okay, so let me go through some of your questions. Good morning to everybody. Last week's low, milking SP, Apple not good news, gold is slow and painful. Yeah, gold, I mean, I've kept saying that. Gold keeps climbing a wall of worry. People every back step gold takes, there are people that are very happy to jump on the occasion and declare how we've now seen the high in gold. I think it's not a smart game to play. Theoretically speaking, gold is currently under the most ideal fundamental backdrop you can envision. So if there was one environment you would want to see if you were long precious metals, more or less that would be it. So I think it's a very dangerous game trying to fade gold. It's not exploding higher, but week by week it keeps creeping higher and higher and higher. And the next upside resistance I see is the 127% extension of this last pullback at 1791, and then we have a nice confluence of resistances at 1823 roughly, and support is now at 1740, and I really find no reason why you would want to fight that. Now, silver has not yet broken out from its recent consolidation, as you see here. So far, we have back-to-back. Of course, it's early on the day today, but Friday was like an indecision channel, like a candlestick, sorry. Like a, what is it, a doji? Let me zoom in. Yeah, a doji. And so far today, it's another like long-legged doji. So, we're seeing some indecision, but definitely in the context of what so far looks like another bullish consolidation. So even though it hasn't broken out yet, I would definitely not try to fade it yet either. Okay. We break above this channel. I don't see any real reason why we shouldn't immediately shoot higher to $18.50 and then $19. Now, above $19, then we do two things. First thing that we do is that we break through this, broad channel. Second thing we do is after years and years, we produce a higher high on a long-term time frame. So, above $19, things starting getting, really serious for longer-term investors. I mean, they're going to start noticing. Even those that aren't involved will start noticing inevitably. So keep that in mind. And also one more thing, as I've said before, silver has appreciated a lot from the March low, but historically speaking, it's still cheap, and you should have that in mind. Now, platinum. This move lower doesn't look impulsive to me in any way. We keep holding on a daily closing basis this $800 area. I have to tell you that it looks quite interesting against $800, this $800 support. From a risk reward perspective, it looks very, very appealing. So that needs to be said. Palladium triangle, previous move was lower, so probably would favor the downside a little bit more. Copper, I have to admit, it holds up quite nicely. Keeps retesting this area of resistance, 269. If we break above it, we should see another attack of this channel. But I have to admit that copper is doing quite well, even though we've had some periods of risk off. It keeps appreciating quite nicely. More or less remains nicely correlated with the Aussie USD, which is unsurprisingly coiling here. Chances are that it's going to break to the upside. I mean, just by isolating this chart, that's what I would expect. Same thing with the Kiwi. That's why I'm a little bit hesitant to call, the reversal in stock indices, because I know that these assets are very nicely correlated to them, and for the time being, they're totally refusing to break down. So, I'm noticing this divergence, so it makes me a little bit skeptical. Any idea on Euro Pound and Pound USD? Okay, those were already answered because it was a question that came in early on. DXY at 98.40, SPX should be at 2900, says Jess. Let me see what else we haven't answered. Halki next to Rhodes. Yeah, Halki is a very nice little quiet island next to Rhodes, indeed. I mean, a lot of Greek islands are beautiful. Dominic says Greek flexing. Okay, let me see. In France, they're not testing for the virus, but if someone had the virus, Joe, oh my God, Joe. WTI, when to short it? Okay, yeah, let me, and natural gas. Yeah, thank you for reminding me about natural gas, actually, because, yeah, I can give you recommendations about the island, by the way, but let's take it one at a time. So, natural gas, thank you for reminding me, because I had somebody emailing me about natural gas just at the end of last week, and I sent him this chart. Saying that, listen, natural gas is on top of key support here, and I was referring to this 151, 152 area. You can see it. We still remain since the 20th of January trapped in this rather broad range from $1.50, 151, 152 to 205. We found support once again there. We're showing so far a nice rebound. So as I wrote in the response to that email, from a risk reward perspective, long positions made sense because you could risk very little to look for another rebound and holding this rectangle, which seems to be happening for the time being. Now, in case we got a breakdown, which can still apply, I mean, we can still see natural gas turn lower and break down. I have to tell you that although it is a legitimate breakdown, personally, I would not be chasing this move lower because I think that there is a very likely scenario that this move to the downside, if that happens, is going to be terminal, meaning it's not going to last long and it's probably going to reverse quite strongly. So that's what I think about natural gas. Now, having to do with crude has broken down from this steep ascending channel. And since it did that, we're seeing a series of consolidation. This is the third consecutive day that we're consolidating, probably a better idea if we go to the 4-hour chart. Here it is. So we seem to be consolidating. I think that there is a likely scenario that there is at least one more leg lower before this move is over. So I would expect that the likeliest scenario, even if this move is corrective, is something like this. Okay, that's what I would expect. So I would not be a buyer of crude. We've seen a huge move higher. I'm not saying that we can't continue higher, but I'm saying that I haven't seen an appropriate move lower based on the prior move to the upside. And I still think that the risk reward does not favor any more long positions. It will, once again, once I see a deeper correction. That's what I'm looking for. Okay, so I would be more than happy to buy crude, but not unless or until I see a deeper correction. That's my point of view.
Perfect segue for Anas El Hajj, who's an energy expert.
Oh, perfect. Okay.
And is our guest.
Having to do with recommendations, I have to go with Kefalonia, definitely. Santorini is very different. Mykonos, not my kind of island for many, many reasons. Naxos is nice. I definitely have to add in the list of islands, Rhodes, Crete, and
Gilligan's Island.
And Lefkada, most likely Zakynthos. Okay, coach. So enjoy the interview, and we'll be back tomorrow.
Okay, I'll see you on Gilligan's Island, Skipper. All right, Anas, I'm going to get you set up here now. So we were talking about WTI and the recent pullback that we've had, and there you are. So I'm unmuting you now, buddy. Waiting to hear you. Welcome back to Face and Us. So there's a drop down. You have a mic, just like last time, went perfectly. And it was on Zoom as well.
He has to unmute himself.
You have to unmute. If you're hearing me, I'm asking you to unmute.
I did.
Yeah, okay.
Oh, but wait. You did, but you muted yourself again. Please
no,
try
I
again.
did.
Oh, you did?
Accidentally. How about now, Anas?
All right. Do you hear me now?
Yeah. Got it. All right. Thank you so much. Welcome back, buddy.
Thank you.
I forgot. Do you want to share your screen to show anything, or are we just going to be talking? All right. So I'll share my screen, and I have WTI up here. So we had since you and I talked, it was pre-COVID, and in fact, you made a very good call pre-COVID when there was that little, well, it wasn't little, after the U.S. took out the Iranian commander. You actually tweeted that it would not really escalate into anything. Great call, because after the Iranians retaliated on our base, on the U.S. base in Iraq, that was it. So thanks for bringing some sanity to the markets. And why did you know? How did you know that it would not escalate? And it would just be a one-off for both countries?
Well, there is. I mean, it's really kind of a basic or common sense issue here that no one has any interest in escalation. What is the interest of Iran in escalating this? Their navy can be wiped out in 2 hours. Trump administration already declared so many times that they're not going to go for war. So why they have to go for escalation?
Got it.
At the same time, the Hormuz Strait basically is extremely important for Iran, because that's how they get shipments out and shipments in. I think this is really worth mentioning here, that if you recall months ago when the 4 tankers were hit in Fujairah, and people said there were 4 oil tankers that been hit in Fujairah, and they accused the Iranians or the Iranian operatives of doing that. That's when the Prime Minister of Japan was visiting Iran. And one of the ironies is the media kept saying that there are 4 oil tankers. And the irony is one of them was an oil tanker, but it was a vegetable oil.
Oh, all
Coming,
right.
Iran imported that vegetable oil from Brazil. And it was, so they took the oil out to another tanker. They took the tanker, they fixed it in Dubai, then they put back the oil in it 2 months later, and it sailed back to Iran and delivered the oil. What that means is Iran, to survive, they need the area to be stable so they can get the food and the oil and olive oil or whatever things they need to eat.
Yes. Okay. So, the fear that the market has had for such a long time, the threat of closing the Strait of Hormuz would be suicide for Iran. Their country would starve to death. Who are they selling their oil to now with all the sanctions in place?
Well, they are selling their oil to, I mean, to various places. Some of it we know,
China?
some of it is not clear. Of course, China is one of them.
Yeah.
But there is more sophistication in smuggling that oil. Of course, some people get offended when we say smuggling because they say Iran had the right as sovereign nation to export its oil anyway. So when we say smuggling, I mean, they get offended by that. But they perfected the game with the help of the Chinese and others in the region. And they perfected their game in exporting their oil to neighboring countries. So this game been going on for a very long time. And the US and others do not have the, or they don't want to kind of investigate these things because it is very costly. And at the same time, it will offend some allies once these things are discovered.
Okay. I wanted to ask you, because I was shocked that when we had that huge liquidation break across the board and COVID panic, I never thought I'd see a commodity trading at a negative price. Like we had oil go to minus $38. What were you thinking when that was going on?
That was shocking on all fronts. I never expected that oil prices could go to negative. Now, we always, when we teach our students in Economics 101, we always tell them when we solve the equations, if you get a negative price, you've done something wrong. And therefore, you have to go and redo your work because the price has always to be positive. That's what we taught our students. But in reality, we are ending up with negative prices. We've seen it in natural gas, we've seen it in electricity, and we've seen it in oil now. But what is clear is that no actual producer was willing to sell their oil at negative price. What we've seen basically are traders who really sold, and the amount was very small anyway, but it was traders who were willing to sell because they couldn't find storage. But actual producers, we couldn't find a single producer to sell for negative price. Of course, before that, probably 2 weeks earlier, we've seen one company selling a very heavy oil at a negative price, but that's kind of very minor, and it was a special circumstance. But we did not see a single producer selling oil at negative price.
Therefore, the instant recovery the day after the expiration of the futures contract. So it was people that didn't want to even get involved with the mess of taking delivery, which has expenses in itself, even before you store it, right? So we've had this nice recovery here, and we're last week some pretty good selling came in around the $42 mark on WTI. You have the chart up here, the weekly chart up here, and right here in us. If you were a gambling man, what would be your projection for prices from this area that we're trading in, right around the $39 level here? What are your ranges that you're expecting, and what would be the catalyst for either a pullback in oil to, say, 25, $30, or are we on our way up to 50?
Okay. We are on a solid floor right now. So in a sense, in terms of going down, we are going to see just regular market fluctuations, but kind of a major dip, there is no story to support that. There are no fundamentals to support that. But let me make a case here, because I think this case is a bullish case, but it has a lot of support. If you look at the current market versus what happened in 2017, right now we have about 180 million barrels in excess oil in storage. That's a surplus. In a sense,
Yes.
above the market equilibrium needs a certain amount. We are above that amount by about 180 million barrels. And the question is, can the Saudis and their allies in OPEC Plus lower inventories to a meaningful level so we can see prices going up? If you look at 2017, the Saudis and their allies were able to reduce inventories in OECD by about 152 million barrels in 10 months. So most of the 180...
How did they do that? By
well, they cut
demand?
production. No, they
Okay.
cut production severely, and then they targeted the US. If you go back to the data, you see that the Saudis reduced their exports to the US substantially, even to their own refinery. In a sense, they starved the US in a way where the inventories declined by 120 million barrels. So out of the 152 in OECD, 120 was in the United States. And they were able to reduce it. The only problem we ended up with is the fiasco that President Trump caused with imposing sanctions on Iran and asking the Saudis to increase production and then give exemptions to 8 countries. And then prices collapsed and storage built again. But we do have a precedent to show that OPEC Plus members can reduce the surplus 180 in a reasonable period of time. And here is where the beauty of this. If you go back to 2017 and compare it with now, in 2017, Libya increased its production by 3-fold and was producing about 1 million. Now it's producing almost nothing. If you look at Venezuela, Venezuela right now is producing half of what it was producing in 2017. Look at shale. Shale added 1.2 million barrels a day in 2017. Now we are talking about negative growth, and probably that negative growth, in my view, it will be probably about 1.8. Some people think it's way larger than that. If you look at Iraq, for example, Iraq is producing way lower than expected. So there is more help for OPEC Plus to balance the market today than in 2017. The only problem is, in 2017, oil demand was growing by about 1.4 million barrels a day.
Right.
Now
So
it's
the tug of war.
Correct. We have this problem because of COVID-19, and it is about demand. Demand is growing anyway, even with a recession. There is a general mistake out there that any recession, we are in a recession now, but some people think that this recession impact is above COVID-19 impact, and that's not correct. If we have a recession with open economy, is way, way better for oil demand than a lockdown economy.
Yeah, because people are driving their cars. In fact, it's
Correct.
a preferred way of travel in this COVID environment.
Correct. And we have enough evidence now from around the world, including the United States, to show that people are abandoning public transportation in favor of private transportation.
Right.
Which means that gasoline demand is going to go up. The problem we have is jet fuel, because flight.
No demand. Yeah.
No, correct. So what is the balance is going to be? That's what we need to know. What is the balance of the increasing gasoline versus the decline in jet fuel? We already seen several airlines announcing that they are going to start full flights this week. So we will see what is the impact of that probably in about 10 days, returning to full flights, whether that's going to increase jet fuel demand or not. But I am very optimistic on oil. I am bullish on oil regardless. What this idea that we are going to hit 100 and 150 and 190 is far-fetched at this stage. Although I am very bullish on 21 and 22, but the reason why we are not going to reach 100, and this is part of an article I'm writing right now, is that when the United States established the strategic petroleum reserves and start filling it up in 1977, it came with several regulations. So the SPR is well regulated in the United States in a way where it cannot be used to manipulate prices. It has to be used in emergency. I know some people might laugh at this because politicians have their own way of manipulating the SPR to play with prices, and I agree with them. But generally speaking, it is well regulated and it will be used only in case of emergency. The problem is we have other countries who are not part of the International Energy Agency. They are not part of OECD. They are building strategic petroleum reserves with no regulations. What that means is they are buying oil at $10, $20, $30 oil. And
strictly
once
to
oil
stockpile.
Correct. And once oil hit 80, they will start selling it. So the idea of reaching 100 right now is really far-fetched because those guys are going to sell, they are able to sell 1 to 2 million barrels a day, probably for 60 days straight. And that's going to not crash prices, but it's going to at least prevent prices from going to 100.
Okay, very interesting point. So should we have a correction back to say the $30, $25 range, that would be a steal for you. That'd be an excellent level. Do you have any levels? Would you just, like a lot of people that are in the gold business and us, they say, don't wait to buy gold and wait. They're not price sensitive. You feel the same way about oil right here at about 39 bucks?
I think it is still a steal at this stage. I mean, especially for, if we look at it from, my background is in private equity. So from a private equity point of view, at this stage, this is a great time for private equity to go back. Of course, for those who have the money, to go back and invest. Everything is dirt cheap. Companies are starved. We already seen the announcement of Chesapeake yesterday. Just indicates that companies are starved for cash, and there will be a lot of assets available, good assets basically, available for sale, whether it's natural gas or oil.
Okay, I want to get a little esoteric with you because we do have an election coming up here. Maybe this could be a topic for another article you'll be writing down the road. Our relationship with Saudi Arabia and the status of the petrocurrency with Saudi Arabia, and the possibility that President Trump is not reelected, who maintained this relationship with Saudi Arabia through some tough things, including, the assassination of that reporter, the war that was going on in Yemen, and should the Democrats win, they may not be as tolerant of that type of behavior. And for many years, people have written that either through unrest in Saudi Arabia, through the masses that aren't happy with being ruled the way they are, or just a geopolitical move by the kingdom, that the reserve petrocurrency status, that Saudi Arabia may start accepting payments in something else, especially if President Trump is not reelected. What do you think?
All right, this really needs a lot of time to explain, so let me try to make it short.
Go ahead.
Generally speaking, what we know about the Saudis historically is that they've been extremely flexible. And they worked with Democrats and they worked with with Republicans.
Yes.
So we have a long history of that. Now, a relationship could be strained like with the Obama administration. But with the Obama administration, most of the problems between the Obama administration and the Saudis is really related to the change in government in Egypt and the support of the Muslim Brotherhood in Egypt. I think that was really what really made the Saudis angry at that time, and they are still angry at Obama until today. Aside from that, everything is workable. I heard, for example, just before the election, that there was a team that landed in Dallas and met with George W. Bush to kind of mediate between them and Hillary Clinton, because everyone was expecting Hillary Clinton to win. So they are very flexible. And I think there will be some issues between Democrats and Saudis. I think Democrats will do a big mistake if they pick up like individual issues and personal issues and start focusing on them instead of focusing on a major policy issue. And when we talk about major policy issue, we are talking about major policy issues for the whole Middle East, not only for one country, because the issues are all connected. So my hope basically is that Democrats will be as flexible as the Saudis in dealing with the issues. But to go back to one point,
stability in the kingdom, you still have confidence in that?
Stability in the kingdom. Let me tell you one piece of information that everyone should know. If you look at the last 100 years, and let's focus on the last 50, that's closer and better. You see that all the turmoil and all the changes that happened in the oil producing countries happened when oil prices were very high. Nothing happened when oil prices were very low. Nothing. Even the Shah, when he was removed when oil prices were very high.
It's interesting.
Well, yes, but that's what the data tells us. Now, there are a couple of explanations for that. And here I am just guessing as a researcher. There is no kind of inside info or anything on this. One issue will be is whatever the other party is going to win big, because there is a lot of gold and money and everything else. You don't want to inherit a collapsed economy. You don't want to inherit a country that's badly in debt and fight for it.
So then why would anyone ever want to be president of the United States of America?
Well, the United States of America is still a very rich country. I mean,
well, you said, you know, you don't want to inherit a kingdom in debt.
I mean,
well, I mean, we've never been in more debt.
Yes, but still, the United States is still a very rich country. If you look just at the federal government ownership of land and resources alone, I mean, it's unmatched.
All right. I was just, you know, throwing out a little.
So in terms of stability, even we've seen this. Yes. But in terms of stability, let me go back in history. And if you go back, you will see articles published in major US and European newspapers and magazines talking about succession in Saudi Arabia and how we are going to end up with a total chaos. Those articles being repeated since the 70s until today, and we did not see that chaos until today.
Right.
We have a few kings died and they've been replaced by another king, and we did not see the chaos that those articles predicted.
Yeah. So we hadn't seen a pandemic in 100 years either.
That's a good point, because the idea here is that never say never.
Yeah.
But as a researcher, you cannot focus on the extremes.
Okay. All right. So you have any feeling on natural gas? A lot of people are looking at, you know, historically cheap levels there as well. And, you know, we're heading into the summer, which, you know, no one's thinking about heating their homes right now. You have a view on nat gas?
Yes, basically, ironically, I just finished an article on natural gas in the Mediterranean. In the United States, here is the issue. The issue is, as more wells come back online with higher oil prices, we are going to have more associated gas. Whether you have rigs drilling for gas or not, it doesn't matter. As long as you have oil wells coming back online, we will have associated gas. The problem we have is this, that there is no bullish story for gas. I'm talking about like very bullish story. Yes, will we go above today's low prices? Yes, but there is a cap on that, and here is why we have a cap on that. Assume that oil prices go to 350, which is a dream for many, and many people will love that.
Yes.
But if we go to that level, we are going to see the power sector unwinding the switching, because they already switched to from coal to natural gas based on economics, not based on any regulations. And if we go to 350 to 380, we are going to see some switching. We go to 4, we are going to see massive switching. We might see up to 6, 7 BCF a day of switching. That's 6 BCF or 7 BCF unwanted gas. That will prevent prices from going any higher. But suppose for some reason they continue to go high. Alberta has at least 2 BCF a day to dump on the US right now. And as you know, the infrastructure is already there. And even if natural gas prices keep going up, if we go higher than that, the LNG that is not contracted will not be sold. And therefore, there will be another amount that will be dumped on the market. So for the next few years, there is no very bullish story for gas. Now, will we hit $5 and $6 like 1 or 2 days because of a spike, because of problems somewhere? Yes. Because of cold winter? Yes, for a couple of days. But to see a major increase in prices throughout the strip, it's very hard to see it in the coming years for the reasons I advanced. They are all on the demand side. So in a sense, by depending more and more on gas, we are killing it.
Okay, yeah, our countries, just like you said, stockpiling oil, doing the same with nat gas at these levels, just in case?
I mean, we already have a big storage of gas, but we reach a point in natural gas where we can literally supply it on demand, and therefore the increase in storage became irrelevant because people thought we can get to 7 and 8 and 9 TCF of storage. We did not.
Yes. Okay.
We did not even build additional storage because we can supply it on demand. And we did not reach that point in oil, but we were almost going to reach that point. So the idea of supplying it on demand prevented building storage above what we had historically.
Okay. Well, I want to really thank you for coming in and giving us your constructive outlook on oil here in us. Are you interested in having people follow you or get a hold of you?
Yes, I multitask on Twitter all the time. So whatever I'm doing, I keep an eye on Twitter. My Twitter handle is my first name and last name, Anas Al-Haji, at Anas Al-Haji. I have a website with the same name, Anas Al-Haji. And I advise a website. It's a specialized website in energy called Attaqa, ATTAQA.net. It is in Arabic, but it had the capability to switch to several languages. So they can switch the language from the top of the page, or on smartphone, they can switch it from the menu. There are a lot of stories, energy stories and commentaries, etc. on that website too.
Well, I appreciate it, and now people will see this and your site, and if they want to know about fundamentals in energy, you're a great resource in us, and I appreciate it.
Thank you. And on that webpage you just posted, basically that chart, I left it there, although it's outdated, on purpose, just to show the view of a global demand before COVID. Because I think we are so busy with COVID, we forgot what was going on before it. So I left that chart on purpose so people can see what was the outlook for it before it.
Okay. Well, I wanted to thank you again, Anas. Good luck in the markets, and thank you for informing people and being a resource in what can be, definitely a volatile market, but a real good trending market once you catch one. So again, have a great summer trading season if you're trading, and we'll talk in the fall, see what's going on around election time. What do you think?
All right, great. Thank you very much.
Okay, everybody. All right, so that's a wrap. I'll be gone for the rest of the week. Remember, don't just count your pips, count your blessings, and I leave you in very confident hands with the ForexAnalytix team, and look forward to seeing everyone next week. Adios. Thanks again, Anas.